Welcome back, investors. Welcome to a new video. This time we will be discussing the latest meeting minutes from the US Federal Reserve. And the main conversation that me personally as a value investor am interested in is to hear if the US Federal Reserve intends to cut the rates or to keep them as they are today. So let's go immediately into it. So the first thing, just to set the context, so we are speaking about the meeting minutes that have been published now like 3-4 days ago. We are August, 25th today. And there has been a meeting July 31st, 2024, and there is always a small delay until they publish the meeting minutes of the FOMC, which is the Federal Open Market Committee, where they sit together with the Board of Governors of the US Federal Reserve. So, again, as a reminder, what is the purpose of the US Federal Reserve? The same like the European Central Bank is to keep inflation at a certain long-term, rate of around 2%. And they have means like setting interest rates, and they're looking at monetary policy. So they're using monetary policy instruments, and they conduct market operations to try to keep this long-term inflation at 2%, which is basically one of their, if there is one agenda point or one target that they have, it is that one. So, and today we're going to focus on the interest rates. And why interest rates are important is because actually they, first of all, they fluctuate obviously, but they will influence also how equity markets will react based on the interest rate of the US Federal Reserve, and it's the same for the European Central Bank. So first things first, let's have a look at, first of all, and I'm going to show you always on the left hand side the prompts that I've been using in VingeGPT. So let's look first at what is the current situation about inflation and also the interest rate of the US Federal Reserve. So what we see here, so I've been using two prompts. So I ask, and remember that VingeGPT has, since now a little bit more than a month, has a connection, a direct connection to the US Federal Reserve. So you can ask VingeGPT to provide macroeconomic indicators from the US Federal Reserve. And here you see that, I've let's say submitted two prompts to the US Federal Reserve directly through VingeGPT. The first one was showing a graph the evolution of the interest rates of the US Federal Reserve and inflation metrics. And you see, just by saying that, it retrieved the two metrics that are important. And what I did, because I forgot to mention that, of course, the values of those two metrics have different, let's say, attributes, and so the order of magnitude is just different between the two. So I had in the second prompt, you see it here, I actually asked VingeGPT use different y-axis for each value, in fact. So indeed you see, and actually I even made a typo, I wrote for each values instead of for each value, but anyhow, so you see actually the results of the two prompts. So it's a sequence of two prompts where I ask VingeGPT to provide me, so first of all, the interest rates from the US Federal Reserve, and then also the consumer price index, or the CPI. But you see that I did not specifically ask for it, but Vinge provided me those results. So one other thing that is, and I was actually also, you see that it, without me actually telling VingeGPT, it provided me from 2017 2024, in fact. And one of the things that is also interesting is, here you see again, what has been happening. Of course, we'll come back to the COVID conversation. The blue curve, you see that interest rates were extremely low, close to negative. And then because money was printed, a lot of money was printed during COVID to keep the economy running, you see the interest rates actually shot up because the intention of the US Federal Reserve, and it's the same for the European Central Bank, was to lower inflation, because there was very high inflation due to the very low cost of money, in fact, and very, let's say, free monetary policy of the US Federal Reserve during COVID, and European Central Bank did the same actually. Okay, so one thing that I always, and I will repeat this, is about the reliability of VingeGPT. So of course we are connected with the US Federal Reserve, but if you remember the prompt here, so what I was showing here actually, the prompt is pretty general. I'm just asking, show me in a graph the evolution of the interest rates of the US Fed and inflation metrics. So I'm not exactly saying what is the macroeconomic metric like CPI that I'm asking VingeGPT to retrieve me. So I just wanted to share here with you. So I used the same two metrics. So on the bottom right, you see the graph that has been created by VingeGPT, and on the top left, I overlapped with transparency the two same metrics, because actually I have not found out how to show two macroeconomic metrics on the US Federal Reserve website. So I played with transparency. You see it here, and you see actually that the curves exactly match for those two metrics. So that's me like checking a box. VingeGPT, very well done. Reliability test passed 100% here on the same time scale that we have, so from 2017 to 2024. I think that's great. Just wanted to show you here, and you have the URLs of the Federal Reserve Economic Data website where you can look at it by yourself. So okay, reliability test fully covered by VingeGPT. Then of course what we're interested in is to understand what are the typical market reactions when interest rates go up or down in equity markets. And I asked VingeGPT, you see the screenshot on the left hand side, I asked GPT to summarize me in two short bullet points or 3 sentences, or with 3 sentences maximum per bullet point. Okay, so it says, well, typically when interest rates increases, actually normally equity markets actually decline. And when interest rates decrease, of course, money supply gets cheaper, and also debt instruments are less attractive. So equity markets generally tend to become more attractive, also because, for example, when companies have to raise corporate debt, the interest expense will go down actually. So by that, companies generate more profits. So, and what we're interested in, and I would like to know if there is a clear correlation between the two. I mean, just for the sake of showing this here, because I mean, here, let me just go back one screen here. I mean, this is a general statement that is done by VingeGPT powered by ChatGPT. But what we want to know is to be a little bit more precise. And you know that I'm a figures guy. I like to look at numbers. So what I did actually, I'm going to show you afterwards the sequence of prompts that have been used for this video. So here you see on the right hand side, you see that I asked VingeGPT, can you draw me a graph from 1950 until 2024 that shows the T10 bond rates and the S&P 500 performance? And this time I did not make the same mistake as the first time I was asking for the CPI versus interest rate. So I immediately said to VingeGPT, use 2 axes to draw the values. And I said also where to draw the information from. Use your historical returns data set to retrieve the information. So remember that VingeGPT has now, since 3 months, has a historical return data set for gold, S&P 500 performance, T10 short-term bonds from the US Federal Reserve, inflation from, I think it's 1927, 2024 actually. So, and of course VingeGPT understood that I was expecting from VingeGPT to look at the historical returns data set. And so here you have a graph, and the graph is correct. Of course, I looked at that as well. And my question actually is like, okay, I mean, interest rates, we know that during the 1970s to 1980s, also with the oil crisis, that we had very high interest rates. So, but as the S&P 500 numbers were small, we don't see exactly if there is a correlation between lowering interest rates and actually S&P performance growing. So what I did actually, I said, okay, I mean, thank you VingeGPT, you're providing me the graph and the data points between 1950 and 2024, basically what I asked you for. But now, and you see the prompt here, is can you analyze if there is a correlation between the decrease in the T-bond 10-year rate and the increase in the S&P 500 performance? And the answer is, well, you see the answer. So VingeGPT is replying, the correlation is minus 0.42. So how to interpret the minus 0.42 let's say correlation? So a negative correlation means that if one goes up, the other one goes down. That's what the negative sign actually means. And then when you try to analyze what 0.47 means, so there is a moderate correlation. So we are at the top of the moderate correlation and the start of a strong correlation between interest rates and the performance of the S&P 500. So and again, this is now kind of confirming the general, let's say, statement that VingeGPT was doing earlier, that is here, where actually it was saying, yes, there is a correlation. When interest rates decrease, equity markets tend to go up. Okay, so here we have a clear, let's say, data point which says the correlation, and we are analyzing, or we ask VingeGPT to analyze 1950 to 2024. It's minus 0.47 in fact. So there is I would say it's a start of a strong correlation. So there is for sure a correlation between the two. So this is what we wanted to, and what I wanted to show you how to use VingeGPT for that as well. Now, having said that, that's not enough. What I also wanted to show you here is, I mean, we have access to those meeting minutes, right? And now, as I was showing you in the very, very beginning, so what I was showing you here, actually, let me just go back. So now, 5 days ago or 4 days ago, the US Federal Reserve has published the meeting minutes, the document from the FOMC meeting together with the Board of Governors that happened end of July. So I ask actually, and for those who did the VingeGPT training or follow us on Discord, you know actually that VingeGPT has been fine-tuned on complexity analysis, sentiment analysis, polarity, subjectivity, etc. And it has those dictionaries to be able to do those analyses. So what we did actually, and what I asked is, well, first of all, so I look first of all at the document, right? And the document, what is the document saying before we analyze the sentiment analysis? Sorry, I wanted to mention that before. So there are 3 takeaways. So on page 10 of that document, so there are actually 3 takeaways. The first one is, yes, the US Federal Reserve meeting with so the Board of Governors meeting with the FOMC committee is actually indeed confirming that there is solid economic growth and the inflation is nonetheless improving. So inflation is going down. We saw actually the CPI curve being flat since a couple of months now. The second thing is they are mentioning that they need more confirmation before adjusting interest rates, but they are thinking about adjusting interest rates. And they clearly say that, well, potential for policy easing, meaning for rate cuts, not for rate hikes, so decreasing rates in the future if the current trend persists. So this is what they are trying to achieve, is to this famous soft landing, is not to be too harsh on monetary policy by having too high interest rates, but really bringing inflation down to 2% and just adjusting the interest rates that it really doesn't have this back and forth effect. So this is what they call the soft landing effect. But here, even in the statement, in the text, you see that they speak about this 2% long-term objective, what I mentioned earlier. This is really the long-term objective of the US Federal Reserve, and it's the same for the European Central Bank. So now coming back to sentiment analysis and complexity analysis. So what I did here, I actually wanted to play a little bit and show you how to perform sentiment and complexity analysis, not on a financial report, but actually on the US Federal Reserve report. So what I did actually, I think it was 7 or 8 reports. I took all the 2024 reports. I took 1 report or 2 reports that were in 2022 when the Ukraine, so the second Ukraine-Russia situation happened. Now I also took 2 reports during the COVID in 2000 and I think that was 2020. You're going to see the results later on. It's very interesting actually. So on the left-hand side here, now you see the whole sequence of prompts that we have submitted to VingeGPT. The first 2 you already saw, so that was related to the inflation and to the interest rates, and then with a correction because I wanted actually to use 2 y-axis. And now, so you saw also the drawing of the graph from 1950 to 2024. I asked for the correlation. I asked also if minus 0.47 is a strong correlation or not. Now what I did, those are now the prompts 6 to 7 and 8, is so I uploaded as a PDF because ChatGPT allows this, but you are in VingeGPT, which is a custom GPT fine-tuned by the VingeGPT team. And thanks, by the way, to the whole VingeGPT team for helping us on that. So I've uploaded the PDF file and I submitted the prompt. You see it on the right-hand side. Perform a sentiment and complexity analysis of the attached Fed report. And you see actually that after, it takes a little bit of time, I would say like 30 seconds, and it does a analysis. So it mentions the amount of words that are in the PDF file, and then it provides some sentiment counters, the sentiment score, the complexity count, and the complexity score. Now, for the VingeGPT skeptics in the room or critics, can you do that in ChatGPT for Omni? The answer is no. And here is the proof. I submitted the exact same prompt to ChatGPT for Omni, which is a very latest model. And again, we love ChatGPT for Omni, but it's not a specialized GPT on financial markets, on investing, etc. Just look at the result. I mean, just look here. Of course, we have fine-tuned VingeGPT. We have asked VingeGPT, provide the amount of words, provide the sentiment counters, and provide the sentiment score and the complexity metrics as well. And there are 2 complexity metrics. ChatGPT 4.0 does not know that, at least for the time being, right? That was the same for ChatGPT 4 Plus. I mean, they do not know exactly. And actually, what is interesting, if you look at the bottom of the answer, it says, if you need a more detailed analysis, I recommend running the sentiment and complexity analysis on your local environment using the appropriate Python libraries like TextStat or similar. With all respect, we love ChatGPT, we love OpenAI because they allowed us to create this custom GPT that we are showing you here, which is VingeGPT. But basically, how many people, let's say, retail investors can create a Python environment, import the right libraries, and write the Python code to do this analysis? You have this out of the box using VingeGPT. So, okay, that's what I wanted to show you here on top of the reliability between the threads, so the Federal Reserve economic data, and actually the results of the prompts. So here you see, and this is now the prompt number 7. So I did this for all the reports that I submitted. So I did the July report, then the June report, etc. And at the end, so I even asked VingeGPT, show me the results in a consolidated table. And I'm showing you here in this table, you see that actually you see the results June 2020, March 2020, September 21, June 2022. And then from January we did until the July 2024 report. Now, what can we draw in terms of conclusions? So first things first. So let's start with 2 COVID reports, and then I took a September 2021, that was like an intermediate report, and then I took the June 2022, which was after the second Ukraine-Russia situation. So, and I got to show you actually the whole graph. Let me explain here through the whole graph. What you see on the left-hand side, so it's sorted from left to right by date. You see on the left-hand side that during COVID, or let's say, during the COVID, or after the peaks of COVID, that if you ask VingeGPT to analyze the sentiment and the complexity was actually pretty similar. They all had like 0.5%, 0.4%. That's not very complex, in fact. That's a metric that would more analyze actually for financial reports. But here what is interesting is look at the bold red line. You see this is the sentiment score, and you see that the sentiment score is pretty negative, so around 150, 130. And we're comparing apples and apples. We are looking at the same type of report, so US Federal Reserve meeting minutes, and we are comparing the same report over different periods of time. What we see is that the sentiment score is pretty negative during COVID, at the peak time of COVID. Intermediate September 2021, it was positive again, and then the second Ukraine-Russia situation, it became more negative. And now since 2024, you see it became, I don't remember the exact value, but it was, I think, like close to 0. It was like neutral. And you see that since January 1st, 2024, that actually the sentiment score is getting negative again. How can we interpret this? Well, we can interpret this that when sentiment score gets negative, that there is a tendency to reduce the interest rate, so to facilitate access to money, to keep the economy running. This is what happened during COVID. Interest rates, if you remember the curve, let me just go back and show you the curve again. So during COVID, let me look here at, so here you see this huge drop during COVID, the blue on the blue curve, and you see that it really remained close to 0, the cost of money and of borrowing money, until really economy kicked back and inflation started to become just no longer under control. So this is where the Federal Reserve very rapidly increased interest rates. So what we see here actually is that when I go back to this graph, which actually shows us on comparing apples and apples, the same type of, let's say, quarterly report from the US Federal Reserve, we see that the sentiment curve is getting negative. What you can also see is, for example, look at the green curve and the blue curve. So that is actually the amount of words that have a negative connotation and a positive connotation. And you clearly see since January 2024, you see that the blue curve is going down, so there are less positive terms being used in the US Federal Reserve report. And there are, let's say, it's pretty stable, but there is a tendency, you see that the gap between positive words and negative words is actually growing. You have less positive words, that's the blue curve, and you have actually a pretty stable amount of negative words. So this is what I wanted to show you here. Again, I'm not the guy who does forecasts, but when you look at the trends, and of course we do not know what will happen next week, next month, Is there going to be, I don't know, a war crisis somewhere in the world? We don't know that, a terrorist attack whatsoever. But what we see just by analyzing those type of metrics, and you see that I tried here to show you very precisely how to use VingeGPT to analyze those metrics. And here we are using the power that we have trained VingeGPT. VingeGPT has a complexity dictionary. VingeGPT, I think the complexity dictionary has 389 words, if I remember well. And it has a sentiment dictionary that has a rough cut around 4,000 words with 7 categories. So here you see the power of those tools. And again, it may help you in your investment journey. This is what I actually wanted to show you here. So what are coming now to the conclusion, what are the next things that will happen? So mid of September, so in rough cut 4 weeks time, there's going to be the next FOMC meeting that will happen. And then in November, there is one planned in December. Of course, the market is getting excited. I mean, we are August 25th already. On Friday, August 23rd, the market again went up because, of course, the market is already kind of foreseeing those interest rate cuts by the US Federal Reserve, at least some investors. So we will see what will happen. But I just wanted to show you how actually you can go beyond just analyzing companies by using now the connection with the US Federal Reserve macroeconomic indicators, but also using the sentiment and complexity dictionaries and the process to analyze PDF files, what we were able to achieve with VingeGPT. So I hope that this was useful and that you have learned something out of it. At least for me, it was great showing you and being able to show you the power of VingeGPT with that. So as a conclusion, we can say, yes, I believe that the rate cut is very likely, at least from the indicators that we see today, but I do not know how tomorrow is going to be looking like. What was for me interesting is that I have a clear indication of the correlation factor between interest rates and the equity market performance, if equity is represented by the S&P 500, so a negative 0.47 correlation. That's just below the strong correlation interval. And yeah, as I already said, that VingeGPT is a very powerful tool that you can use also for things like sentiment analysis, because we have fine-tuned it, and I showed you the results just asking ChatGPT for Omni, but also having access and using the connection that we have now since 1 month with the US Federal Reserve threat database. So with that, thanks for your attention and talk to you in the next one. Do not forget to subscribe as well to this, our trainings, our YouTube channel on LinkedIn. And if you want to have more information, of course, and you want to know when the next webinar is, you can go also on VingeGPT.com. With that, thanks, and talk to you in the next one. Bye-bye.